Welcome back to the channel. Welcome back. My name is Patrick, and in today's video I'm going to answer a question that a viewer left in the comment section about my funded account challenges. So as you know, I do trade with 5%ers. I have been funded with them, and in the steps to get funded I pass my evaluation processes by scalping. Okay, so the question was, are you able to pass the evaluation stages scalping using 1-to-1? Okay, quick answer, yes, because that's what I did. Okay, that is what I do. When I first started trading, I as a new trader, you come into the game, you're looking at other traders on YouTube, and they're bragging about their great trades they did. They caught this move here, no, they caught this move here, ran it all the way down there, 100 pip move, 1 to 12 risk to reward, great. And you think, okay, I want to be like that person. I want to learn how they trade. I want to find that setup and want those wins. I want 100 pips per day. Okay, people, it's not true. It's rare. It's rare you could do this consistently. I have tried. You can find these moves. There are ways of finding these moves, but here I'll give you a quick example. Here I can see there's a little on the H1 this is, but I can see there's a 5-minute on M5. There will be a reversal here that took this move there. There's a reversal here that took it up here. Okay, the next day the reversal was there. It took it there. And this is downtrending, so I would expect it to beat this low. So from here, I would expect it to beat that low. But what it does is come back up here, stops you out, then goes and completes that move. Okay, this happens often. The longer you are in a move, the more likely the market is gonna manipulate, come out or come against you, take you out, then go in the direction you believed it was going. And also in the process of doing this is 1 hour, 2 hours, 3 hours, 4 hours, 5 hours. That's all 2 days before it got to this point. So it really then becomes what kind of trader you are, what kind of person you are, and it then comes down to your individual preferences. Okay, I'm not the type of person who likes to sit in a move, get manipulated, taken out, and then see the trade go in my favor. That will trigger me. I know that because it has. Okay, that makes me upset. I then get upset, start trading emotionally, revenge trading. I will lose my account. So from my own experience, I know scalping works for me. Swing trading, I love the idea because I find these moves. Most of my, if you know my setup, I'm usually finding swing points. I'm usually finding a trade there. I know how to find them. And I know if this is downtrend, I can expect it from here to try and run this low. But I know I haven't got the patience. I know there's manipulation in the market. So from my own experience, my personality, I know one-to-one is easier for me to get, and it is good enough because I could get 1% there, 1% there. If I wanted, I could got that other 1% there. So that's 3% across 2 days. I'm good. So now with evaluation accounts, usually they ask you to get 10%, 5%, maybe 8%, depending on the steps, right? But once you get funded, it's usually 10% to reach the next stage. So if we're 10% and we're doing 1% per day, or even 2% if you're greedy, or if you're feeling quite lucky, let's look at 1% per day. That's 1, 2, 3, 4. Wait, there's 1 there, there's 2 there, there's 3 there, there's a 4th one, there's 5. There's 6, there's 7 there, there's 8 there, there's 9 there, and there's 10 there. Okay, in about 10 trading days you can pass an evaluation stage, you could get funded, and you could consistently grow if you are disciplined. That's the key. It's not really about how many pips you catch or what is the best strategy. You need to find a strategy that works for you and then consistently do it, and that's it. Okay, so some people who do swing trades, who do hold moves longer, who have great amount of patience, I respect that. If you can do it, great, but you need to understand the people who are able to catch these bigger moves take more losses. Okay, so What kind of trader are you? Are you someone who likes to win often? Or are you okay taking losses, then your wins outperforms your losses? Because the people that catch the 1 to 6 trades, 1 to 6 risk to rewards, they usually take 1 or 2 losses before they catch that move. Okay, so that could be the difference between having a win rate of 80% or 40%. If you can live with a win rate of 40%, by all means, catch this move and hold it and see if it gets up there. Okay, if you are the type of person who likes to have a high win rate, who likes to win often, 1-to-1 is the easiest thing to do. Okay, I'm going to show you some examples to illustrate this point, and if you stick around to the end of the video, I'm going to show you where I am. Okay, so I'm still away, I'm on holiday, kids are asleep, so I thought let me dedicate this 10 minutes or so to answering this question. So H1 here, you can see on EURUSD would be downtrending, and I think there was the last video, I can't recall where the trade was, but basically I think it was around, no, this is Friday, Thursday, it was a Monday, Wednesday, Tuesday, Monday. Okay, no, it was the Tuesday. Okay, so here at this point here, I expected price to go from here to continue the downtrend and go down there. And as you can see, it did. But what it did first, it pulled down, stopped me out, or did it? I can't remember. It would have stopped me out, then went. Okay, so forget that. That's not the example I want to show you. I'm going to show you Thursday and Friday. Okay, so these are the last 2 trades I took this week, and I hopefully illustrates my point. Okay, so this isn't live charts, by the way, because we are recording on Saturday. My setup, we are at swing point here. This is a swing low. Okay, so it reversed up and is trending. On Thursday, new day, we are prices coming up, so it's taking it out to supply. We're looking for a reason now to sell it, because we sell from highs and buy from lows. This is supply and demand. This is how the market works. You need to remember that we are selling when it is at a premium and we are buying when it's at a discount. That's how the market moves. The charts then gives us an indication of when to get in. Okay, and what I look for is a breaking structure to show me that price is going the other direction. So it's been coming up here, trending. We have a trend here, a low here, a high, a higher low, a higher high, a higher low, and so on. So at this point here, we have our last higher low there. Okay, let me zoom again so you can see exactly what I'm talking about. So last higher low there, it pushes up here. It's meant to pull in here and go up to break this high to create a new high. This will be another higher low, right? It's meant to push up here to create a new high, but it reverses and breaks this structure. When it stops there, it comes down and breaks the structure. As soon as it does that here and pulls back in, that's my entry. My stop loss is above here, and I believe this was a 12 pip risk or so. Yeah, so 12 pips there, and I'm going for 1-to-1. 1-to-1 is there. Okay, that is it. That's all I ask for. 1-to-1. Okay, why 1-to-1? Because it's the easiest thing to ask for. I know my setup. I could easily get a 2-to-1. I back tested it, I recorded the data. I know I could get a 2-to-1 quite easily, but I know in trying to do so, I'm going to take more losses. So that could be the difference between an 85% win rate, which is my standard, or a 70% win rate because I'm trying to get a 2-to-1. Imagine if I'm trying to get a 3-to-1 or a 1-to-3 or 1-to-4. This move here did actually move a lot further. As you can see, let's zoom out, it went a lot further. So if we held it and it took that low that I pointed out, it took this low here, that would have been my target. That would have been most people's targets actually, who would have been swing trained in this. That's 62 pips. So that's what, 12 pips, I can't maths right now. That's about a 1-to-6, right? Cool. So I could go 1-to-6 there and made 6% on just this one move here. That would have been great. Okay, I took a 1-to-1, so I missed about 5% here. Okay, so for a lot of people, they look at that as a missed opportunity and so on, right? I'm okay here, and I'm gonna show you why. Because through my experience, I've learned that it doesn't always work out like this. It doesn't always go according to plan. Okay, and I'm going to show you this example here. So that was Thursday. This is Friday. So we're downtrending now. Okay, price is coming down. It comes down to this low here. We are new lows, so I'm expecting a reason to buy it, and the market gives me that. Okay, so we're buying from lows. Okay, so here we're downtrending again. That's the same setup. We're downtrending here. There's a high here, a new low, high low, and lower low here. Let's just zoom in a little bit more. And at this point, what was it? At this point here, we have our new low, okay? Our lower low. So from here, you would expect price to pull up to this point here and push out again to continue this trend. But as you see, it breaks this last high, pulls in here, and pushes up again, creating a high and a higher high, creating a low and a lower low. So it's a slight reversal, okay? So my entry then will be from this point here. So I'll enter there, risk my stop loss is underneath here. I'm risking 5 pips. My 1-to-1 is 5 pips. It gives about 10 pips. So it gives again 2-to-1 just on that little move there, right? And then it stops us out. But we're out already. So this is a winning trade, okay? I could go 1-to-1, I could go 2-to-1. If you were swing trading it like the previous setup I just showed you, and if we zoom out onto H1 and if we follow the trend is the way it's moving. Price breaks out, pulls back into the zone it broke out from, breaks out here. This is a low, it pulls back into that zone, then breaks out again. So from these lows, you would reasonably expect it to pull back into this point it broke out, okay? Because that's what it's been doing. That's how it's been moving. Yeah, it breaks out, pulls back in, breaks out, pulls back in, breaks out, pulls back in, breaks out, and that's how the market moves, right? It moves in this zigzag formation where it creates a new low, pulls back in, creates another low, and so on. I have a series on price action, and that's basically what this is. So that's what the expectation would be. So from these lows here where I saw the break instruction, I would reasonably expect the move to go from here to get back into that, which is only 20 pips, right? And we're risking 5 pips, so that would be a 1-to-4, yeah? And as you can see, it pushes all the way up there, almost gets there, and then turns around and stops us out, okay? If we were trying to hold it to get to this point here, that would be our 1-to-4. I got out at 1-to-1 here, yeah? And this is why, because look, what it did here is came back and did enough just to stop me out or stop people out, and then went and completed the move, okay? And this is why I scout for 1-to-1, because this happens a lot. Now, typically, people place their stop losses underneath this low or 10 pips beneath that, right? And look, it ran exactly 10 pips underneath that. Make sure it got everyone out who was hiding underneath this low, stop losses underneath this low. Then it came and completed the move. So if you saw what was going on higher time frame and you saw the move and you thought, yep, this is what's going on, I'm going to take this move. Everything's right, you are correct, but look what the market did. It is designed to take our stop losses to make money. It's a foreign exchange. People make money when someone loses money, okay? As far as trading goes, okay? People are making money in exchanging money, and people are making money in traders losing money, okay? So it stops us out here, it would have stopped us out here, and then completed the move. And then from here, I would expect it to run these equal lows, but that's another story. So this is what I'm saying. 1-to-1, I would have got the move. 1-to-4, I would have lost the move. I know if I was that close to getting up my 1-to-4 and I lost there, I would have then thought, okay, maybe I was wrong. Maybe I should, trade it down. And a lot of people would have just jumped in here, tried to trade it down, and then they got stopped out because their stop loss would have been above this high here. They would have got stopped out, and they thought, okay, I'm wrong, let me jump in, go this way, and look, stop that again. The stop loss would have been there, stop that again. The market is designed to do this, people. The easiest thing for me is to go one-to-one. So that's why I do one-to-one. That's why I scalp it. I'm not interested in counting pips. I'm not interested in bragging about how good I've read the market. Most of the times I get it right. I'm finding swing lows. My setup is great. I'm not being modest at all. My setup is great. I know that. I know what makes it better, what gives me a higher percentage or higher probability of winning trades is to go to one-to-one. So the question is one-to-one enough? If I'm risking 1% and I'm going to one-to-one, that's 1% per day. Ask yourself, 1% per day, 10 trades a day, is that enough for you to pass the evaluation stage? Yes, it is. Even if you took losses and it took you the whole 20 days in a month, okay, is that enough? Yes, it is, because this win rate is in the 80s, so it's enough. So what do we need 2-to-1 for? Stick around for 2-to-1, you could lose. And if you are in control of your emotions, taking that loss is okay, because the next move you can get a 1-to-5, 1-to-6 following the setup. You can actually get more from it, and that's why the people who hold moves or swing trade, they are able to catch bigger moves because they are calm. They are relaxed. They are used to taking the losses. They're okay with taking the losses, and they will just wait for the next setup, take that, and then they're looking for, if they lost 1% on that move here, they're looking for a 2-to-1, so a 1-to-2 to make up the the loss and gain back the other. But they have a lot of experience, they are calm, and they know how to trade these markets. And if you could do that, yo, go for it. Hold the move. Try get that 1-to-4 per trade if you like, or whatever works for you. So question is one-to-one enough? Yes, it is. I trade one-to-one. I'm good at one-to-one, and I think if I just stick to that and try to be disciplined and forget all the noise I'm hearing about 1-to-12s and all these other influences distracting me from my objectives, I'm good at one-to-one. Okay, if I do one-to-one and I look long term and project a year worth of trading doing one-to-one with my 80% win rate, is that enough? Yes, it is. Okay, all right. I hope I drilled that home. I hope I've answered your question in detail with these examples. I've got tons of examples here where I've seen trades going in my favor, then just turn around, take me out, then do the move I wanted, and I know how I reacted to them, and I don't want to continue making the same mistakes. So I know from back testing, all these trades here are marked up. I've looked at where I've lost trades, and I know what to do to get those trades back. And I know at one-to-one, statistically speaking, I'm got a higher probability chance of winning trades, and I like winning trades. I'm not interested in losing trades. I like easy wins. One-to-one is the easiest thing to do. Let's keep it simple. One-to-one is the easiest thing to do. If you want to do more, that's up to you. Okay, I'm gonna sign out. I'm gonna show you where I'm at. I'm here for a few more days, and then I'll be back to my normal settings. Hopefully I'll be able to post more, and we'll keep it going there. I'll keep you updated with the progress as I progress. People, Patrick signing out. Until next time, peace. Enjoy. So all of this was a part of a home exchange. So I've been here for about, 4 or 5 days so far, completely for free. Amazing, right?